Welcome to the Market Alert for Monday the 12th of December 2016. So on Friday we saw the market trading sideways initially, just as it did on Thursday, and then once it broke out we then had a buy signal and then a buy signal later on in the session. But first we had to have a 17-point loss in the first trade and a 24-point in the second before we had a 20-point profit in the third, which you'll see the market just actually hitting this and then pulling back. Market stays above the 20 bar average. It closes on this bar and this bar, but then hugs the line, as you can see there, and then we get this trade here where the market gives another buy signal. This time it drives through the scalp, and when it drives through the scalp you can either take the profits at the next psychological level, and this takes us to 25 minutes to 9. You see the market traded sideways there, and then to 9 p.m. when the market actually broke through, and then we'll trade all the way up to 9:15. Then the market traded sideways as it came to the end of the session, which was 2200 hours there, 10 o'clock, and then this gap up is Sunday night's session that you can see there. So there's a way of actually recovering and coming out with a profit on the day following the first two losses, 20 points in this, and up to the psychological level of 19,000 and I think what is 750, that's 19,750. The market gave around 41 points profit on that. As I said, I wasn't here on Friday, so I didn't trade it, but I'm just showing you how the market should have been traded if you'd had the losses in the first two there. The market then breaks out to say that there's going to be some activity, which it traded sideways for a while, but then we had the buy signal, and again this was pushing prices to the upside. And we know from the background that we've got this what's now being called the Trump rally going on in the background. Then we've also got a new all-time high today already on the overnight market of 19,872, and as I keep saying, they want this market at 20,000, and they're going to do it. I have no doubts about that. And then it will be a different ball game once it's done. That it'll be the first time in history that the market has hit the 20,000 level. And it's not just me that's been saying this for the last few weeks, but it's also made its way to the news now as well. It's beginning to look a lot like 1999 when the Nasdaq had this vertical climb and then gave back 50% of its move. As it says here, caveat emptor, buyer beware, Dow 20,000. So it seems that this is the major psychological level they want to get this market to. It'll be probably the first time and the last you'll see it for a while once it does get to this level. So again, something else to keep in mind as well. Let me just go back to the daily chart and to news. Nothing today, and that's because there's nothing today, but Wednesday is D-Day. Doesn't matter what happens in between. This is the big one. This is the federal funds rate. This is the live meeting. This is 1 year to the week that Yellen increased interest rates from 0.25% to 0.5%, and you can see there the forecast is to go from 0.5% to 0.75%. And we all know what happened last year when Yellen increased interest rates. We saw the market drop. I'll just go back to the daily chart so you can see this. I'll just pull this over, just get rid of this, make a bit more space. Just drag the chart over to the left, so if you want to see what happened, there's your move from 0.25% increase in interest rates last year. You can see exactly what happened. And also we had the corresponding 100% increase in the implied volatility, which I do have the new charts, but I put them onto this computer this morning. They're too light in colour. There's no contrast to actually see much in them, so I've got to modify them, but I'll show you tomorrow. So we had the 100% increase, and then also a call from Yellen to Carney and Super Mario Draghi, and then the market made its way back, and now we're sitting at this ridiculous all-time high that we have here. No fundamentals back in this, it's purely central bank driven. So we've got this on Wednesday. This is the big one as far as the markets are concerned. On the implied volatility fronts is 1072. But interestingly enough, on Thursday, the implied volatility was 1133, even though the market had made a move to the upside. And again, if you go back to the daily chart, we had the market moving higher, but the implied volatility had actually increased to 1133, which was slightly odd. So again, it's interesting to see that there is a bit of a concern by the option sellers the way this market's going up, and they seemed on Thursday anyway they were going to price in a bit more risk, but Friday we saw this drop back to 1072, so they're obviously comfortable, thinking, well, we've got a few more days yet before Yellen actually increases rates, so we should be fine. So they pull back on Friday there, but I'm surprised this is not pulling back even more, and again that really says that the option sellers are quite concerned about this vertical move that we've seen in the Dow over the last few weeks, or since Trump's election victory there. You can see it's just moved all the way up. In fact, let's just have a look out of curiosity from when the market regained the loss. So let's go from the open of this bar here, because the market dropped and then it came back. So I'll tell you what, no, we'll go from the close of the day after the election day. Let me just pop on the crosshairs just to make it a bit more accurate. Do that by there we go, just cancel that. All right, there we go. So we've got the close there, it doesn't matter where you click, to the high of today. So we've got a 1278 point rise in this market since Trump won, and of course the biggest chunk of that is past the 19,000, of which we're 700 points up already on that. So only 128 points to get to the 20,000, which is no big deal at all. That could be made today actually, whilst the market's quiet and there's no news. But we'll see what happens anyway. I've gone on long enough. That's will do for today as ever. Thanks for your support, and also for watching. I'll report in later if I see anything happening, and see you in the next one. Thanks for watching.